Hi, this is just a very quick video demonstration to show you how to use the ACE forecast template. The purpose of this template is to give you a very simple way of doing some forecasting of both profits and cash. It's very, very simplistic, so it's not complex in terms of taking into account things like VAT and complex tax and things like that. If you need anything more complex, then obviously give me a shout. It's just very, very simple to use, but it's just going to give you quite basic information as well. But you should get the principle of it. So there are quite a few different sheets. So the green ones at the front, these are the ones where you input the data. The red ones, the reports will be generated as a result of entering that data. The blue sheet is an instruction sheet. So I'll just show you this one. So I would just recommend printing this out. It's just to give you more guidance as you're using the file. So I'd print that out. You don't need to do anything more with it. So we would always start with the expenses sheet. So the first thing I should point out is the colour coding on this sheet, and it's the same throughout the file. So basically if it's a green cell, you can edit it. So I've put a list of different expense types in there, but you can edit those as much as you need to. Also, this cell here has got the month and the year in. So this is the starting point, and because it's green, you can edit the starting point, but you won't need to edit any of the other cells because they will automatically calculate as we change this first one. So if I wanted this to start from January, I can literally just enter in the 1st of January 21 into that cell. And that subsequently changes all of the other cells as well. Okay, this column here is formulas, so you can't see the formulas because it's in yellow. You can tell it's formulas, and if I try and edit those, it'll show you that it's locked for editing, that the sheet is protected. And it's the same with these date ones. If you try to edit one of those, you get that same pop-up, so you can't break it. Well, you shouldn't be able to anyway. So what we then need to do is plan in our monthly expenses and when they're going to occur. So as I say, you can change any of these. So it may well be that first one we're going to change to salaries. Oh, hang on, salaries. Okay, this column here is for payment terms. Now this is orange, so it contains a pick list. So when you select each cell, you'll see a little arrow comes up to the right of the cell. And if you click on there, it gives you a little pick list. So it gives us the options of choosing 0, 30, 60 or 90 days. So this is about payment terms for each of these different expense types. And it is from when we incur the expense, when do we have to physically pay the cash over. So with salaries, if we're going to pay salaries in January, we'll have to physically pay it 0 days after that point. So we'll pay it immediately. Whereas perhaps for insurance, we'd pay that 30 days after we get the bill in. For marketing, maybe we've negotiated 60 days payment terms, etc. So you can set those as they are. If you pay for them immediately, I'd just set them all to 0. But I'd say some of them you will be paying on different payment terms. And then we can pop in what we expect the salaries to be. So let's say those salaries are going to be $1,500 every month. I'm just going to paste them into every month there. Let's say insurance is going to be, say, 35 quid, and that'll be every month as well. Now marketing, it may well be that we pay a lump sum up front. We might pay $2,000 in January, and then maybe in April we might pay $1,000 as a top up. And then we might pay another $1,000 in July, but then we might do a special campaign in September that's going to cost us $5,000. And then we might just pay another $500 in December. It can be, you don't have to put something in every month. It can be different amounts. It can be exactly however you expect it to be. So I'll just leave those costs in there for now, but you can, as you can see, you can carry on with those. It gives us, in this column here, this gives us a total for each row. So that's telling me that 18,000 is the total we're going to spend on salaries, 420 on insurance and 9.5 grand on marketing. So the total cost for the year is 27,900, and this is how it's broken down by each month as well. So it gives you that analysis as you put the numbers in. Okay, so then we can go into sales. So if I click into the sales sheet, exactly the same in terms of colours. These cells here are, again, you can edit them because they're green. So you could either refer to them as different clients or different products. So for me, I've changed this to workshops and projects. Or you could change it to areas or whatever is relevant for you. So again, I'd say workshops. I think I've set these payment terms because workshops will be paid up front. Projects might be paid after 90 days. I could leave those as clients, or I could delete that. So you can do it whatever you need with it to make it relevant for you. I'll then put in, so the workshops might be, say, 500 every month. So pop that in. And then projects, it may well be that the first project might be £3,000, and then April might be another £3,000, and then July might be the same, October, or let's say October's going to get better, it'll be £4,000. Okay. So again, our total income is going to be 19,000, which is split between £6,000 from projects and 13,000 from projects. Sorry, £6,000 from workshops and 13,000 from projects. Okay, so knowing that that's our total sales, 19,000, and knowing that our total expenses is going to be, well, 28 nearly. We've quite clearly got more expenses than we have sales. So we might want to increase this. Let me put some, I'll put another line in, and let's say it's going to be 2.5 every month, and that's going to be payable after 30 days. Okay, so I've now increased the sales to 49,000. Okay, I only wanted to do that to make sure the sales were higher than the expenses. So expenses nearly 28,000, sales are 49. Okay, so now we've input that information to expenses and sales, we can have a look at these red reports, which will show us how they come out. So in P&L, P&L basically shows us again by month. The whole of this sheet is all linked by formula, so you can't edit any of it. If you try to by accident, it will tell you it's protected. So turnover comes in as total sales, that's that 49,000, and it's just by month, so it doesn't give us a breakdown. Expenses does give us a breakdown, so you can see that's exactly the same as the list on the expenses. So where I've changed that at the top, I changed that salaries, it's come through here already. So we've got total sales of 49,000. There's our total cost, that adds up to 27,920. So one minus the other gives us a profit of 21,080. And then we'll pay tax on that, which will be £4,005. So we're left with £17,000 profit. Okay, so, and the profit and loss takes the costs as per, the cost and the income as per it's incurred. So they are as per the dates from the expenses and the sales sheets. So that one's quite easy to get your head around. But like on the sales here, where we've said that this one in January, we wouldn't receive that payment for 90 days. So we wouldn't be receiving that 3,000 until April. Okay. So that's what the cash flow does. So if I just click on there, the cash flow basically analyzes the same income and expenses, but when the cash is going to come through. So again, we've got all the same months, they all feed through automatically. We've got the income, this is now broken down by the different types. So we've got the 3 there. And we can see that workshops, that was paid immediately. So workshops was 0 payment terms. So that £500 was going to be every month. So that comes in the month. So there's your £6,000 for your workshops. Now projects, because they were 90 grand, the first one isn't coming through till April. So you'll see the total income we'll actually physically receive is only 9,000, although the profit and loss, let me show you the sales. So the sales on projects is 13,000, but that last £4,000 we wouldn't receive until January 22, technically. So that's not included within the cash flow, you see. And then ad hoc, obviously the first 2,500, because that was set at 30 days. So you can see that the first amount doesn't get received until February. Okay, so what this is basically showing us is that our total income in January is going to be that £500. And then this is all of our outgoings, everything we've got to physically pay out, which is going to be £1,500 on those salaries. So that basically means the total cash flow is minus 1,000, it's negative, which means we need to spend out more than we're actually going to physically receive cash-wise. So this green cell here is the only cell you can edit on this sheet, and it's to put your opening bank balance in. So by the look of this, we're going to be overdrawn by 1,000 because that's your closing bank balance. So unless we had an opening balance of 1,000, type in 1,000 there, then that means that will cover us not having enough cash to pay the wages basically in January. But our closing bank balance will be 0. But that's okay, because in Feb, we would actually have a surplus cash of 1,465, which means would be okay. So you can see there, no other point during that year would we be overdrawn. So as long as we've got that £1,000 as a buffer, as an overdraft maybe, we know we'll be fine with that. If I set that back to 0, without having that 1,000, you can see that we're overdrawn in January, we're overdrawn in March, and then it picks up after that. But the other benefit of this file is that if I go back into sales and I say, what if this position is worse? What if this money doesn't start coming in for 90 days and we change that one to 90? Then we can see that, so the profit and loss won't change at all. That's still showing our lovely 17 grand profit. But our cash flow, we can see we're really overdrawn in January, February, March and April. And the highest amount we're overdrawn is £5,070. So that tells us straight away that if that was going to be our income and when we're going to start receiving the cash, then we need to have some kind of overdraft to or loan facility or something to tide us over until we start seeing the cash coming in. Either that or we just negotiate better payment terms for the work that we're doing. Or we increase the sales of workshops, which doesn't have its payments up front. So hopefully that makes sense. You can see the benefit of that. There's also a little mini dashboard which basically shows the operating profit and the cash flow both as charts. So hopefully that helps you to understand as well the difference between the profit and the cash flow. Okay, so as I say, it's a very simple, very simplistic sort of template. If you do need anything more complex, it's essentially that is the same model, but we can make it as complicated as it needs to be. So I hope you found that useful. Thank you.